Well, good morning. I'd first like to thank the team here at Policy Exchange for inviting me this morning at such an early hour. In the 15 years since it was founded, Policy Exchange has been at the forefront of the solutions to some of our biggest policy problems, whether it's areas like education, energy, housing or security. And I particularly want to thank you, Dean, for your thoughtful, informed leadership. It's fantastic to be here today to talk about the burning issue of our time: freedom or control. We've made huge strides in becoming a freer country where we all have opportunities. And I celebrate the disruptors who have sought to change the status quo. Gig economy firms like TaskRabbit, Airbnb, they brought fresh possibilities to all kinds of people, including those who were previously left behind. Nearly 2/3 of those renting their property through Airbnb are women. And Uber is particularly used by those on low incomes. For the under 30s, the ability to hail a cab or order a takeaway at the touch of a button is a way of life. Free enterprise has huge economic benefits, driving down prices and creating growth and jobs. But more than that, it is intensely democratic and open. It breaks down monopolies, hierarchies, and outdated practices. And it's why so many people from non-establishment backgrounds have succeeded in enterprise. You don't have to be part of the old boys network to set up a business. The essence of entrepreneurship is what the author Malcolm Gladwell has called the freedom to be disagreeable, to not rely on the approval of others or give up in the face of some initial uproar. It's how all the big disruptors made their mark, from Apple to IKEA. And when I travel around Britain, I see all kinds of businesses popping up, from vape shops to vegan burger bars. Britain is booming with them, and some people see these things as a flash in the pan. I see them as modern pioneers of British freedom. I am neither a vegan nor a vapor, but I love living in a country where businesses and individuals can pursue their own dreams and desires with a minimum of interference. I've always been pro-freedom, and I have to admit, this is fundamentally because I have never liked being told what to do. It goes against my nature. And as soon as I started earning a living, I realized that freedom meant more than just being able to express yourself. It meant having control over your own money, and it meant being able to use that money how you wanted. And that kind of economic freedom is just as important as any other kind of freedom. In the words of the economist Milton Friedman, underlying most arguments against a free market is a lack of a belief in freedom itself. This point was brought home to me last summer when I visited the Korean peninsula. And I met 3 North Korean 20-somethings who'd escaped from the repressive regime north of the border. And they talked to me about what was happening in North Korea and their pleasure and excitement at finding ways of bringing goods into the country and sharing and trading with their friends at the local market. And what was this contraband that they brought in that they were trading at the local market? Well, it was South Korean TV box sets and hair accessories. And it struck me then that it was those simple items that had allowed those young people to express themselves and to feel truly free in a country which is known for its level of repression. Now, of course, in Britain, we are fortunate to live in one of the freest countries in the world. And over the past 7 years, the Conservative government has extended this freedom. We've reduced taxes on basic rate taxpayers and companies. We've extended private ownership, as in the case of Royal Mail. We've used the private sector to deliver key projects like Crossrail. And we've made it easier for companies to take on staff. But as important as what we have done is what we haven't done. We haven't bowed to calls for government intervention. We have refused to bail out companies, even when there's been political pressure to do so. Because where does money from bailouts come from? It's money that we take from families and small business in tax. And it creates a system where the big and the powerful are protected from failure at the expense of new entrants. We cannot allow a small minority of businesses that misbehave to damage trust in the system. Our economic freedoms have allowed enterprise to thrive. Last year, we saw twice the investment in new tech than we did the year before, and employment is at record levels. But there are still some people in this country who scorn that success. The economic liberation of the 1980s ushered in social liberation, which meant that Tony Blair rode to victory. And in the same way, the new enterprise we have unleashed has ironically brought the hard left back from the grave. Take Momentum, for example. They meet in buildings built by private companies. They sip lattes brewed by private firms. They tweet about how terrible private companies are on a social media platform run by a private company. It is perverse that the left is so adept at using the fruits of the free market to peddle their message of control and anti-freedom. Take Labour's war on Uber, a company that's bringing choice and value to millions of people. It's been condemned by the Shadow Business Secretary and the Shadow Chancellor, and across the country, Labour councils are fighting day in and day out to close them down. Or look at Airbnb, which is making it easier for people to rent out their rooms or to find a cheaper place to stay. Labour's Karen Buck has put forward legislation which would force people to register with the government before using Airbnb. Other ideas are being mooted, such as a robot tax on the growing artificial intelligence sector. It wouldn't surprise me if Jeremy Corbyn is cooking up plans for a Bitcoin miners' strike. They call themselves anarchists, but they deplore freedom of thought and ideas. Blairites are the enemy, free schools are the enemy, business is the enemy. That last one is John McDonnell, by the way. And this is Labour's agenda, shutting down economic freedom from the top while closing down freedom of thought and expression. John McDonnell's vision for Britain is a planned economy built on the triple terrors of nationalisation, crippling high taxes, and a new set of government authorities, including a Ministry of Labour and the Strategic Investment Board. Now, I don't know if you had the opportunity to see Labour's Strategic Investment Plan. It looks a bit like one of those wall charts in a crime drama. It's a big and chaotic programme that seeks to control the economy, and that control comes at a cost. £170 billion for the nationalisation at the last count, and a further £350 billion for the National Investment Bank. This all adds up to an eye-watering £500 billion paid for by higher taxes on you, your business and your family. And the plan to hike spending and nationalise industry won't just mean worse services and higher prices. What it will mean is moving economic power from individuals and families to the centre of government. It's the quickest way to kill Britain's economy and to restrict our freedoms. Just imagine what it would be like. You've got a big idea. You want to start a small company in the energy sector, but you can't because it's illegal. If it's in a different sector, not yet under government control, you have to apply to John McDonnell, who will rule on whether or not it's a national priority. If not, you can forget it. Then you have to raise funds, but you can't, because their economic policies have caused massive capital flight from Britain. You try overseas, but Labour have banned foreign investment. But you defy all the odds and you get set up. You finally win some business, but your larger competitor moans to the Strategic Investment Board that you're disrupting the industry and you're threatening jobs. A sternly worded letter appears in your letterbox, ordering you to scale back your subversive activities or you'll lose your licence. But you struggle through, and when you finally turn a profit, having survived a Labour minefield of middle managers and meddlers, McDonnell takes his half to reinvest in productive enterprises like bailing out big corporations and paying off the debts of wealthy graduates. And so you arrive home on a slow nationalised train to find your council tax has gone up again, your bills are through the roof, and there's no electricity because John McDonnell has diverted it for other purposes. Now this might seem far-fetched, but it's exactly where John McDonnell's ideas will lead to. Venezuela is his real-life blueprint. Despite this, there are a worrying number of people who are seduced by these promises. I believe that we must have the confidence to chart an alternative course, one that is based on the values of freedom that has always made this country great. And we need to apply it in new ways, to new markets, new situations and new challenges, so that the benefits of the free market continue to be felt right across the country. First, we need to unleash the potential of blockchain and artificial intelligence. Those bring new freedoms to the individual and benefit our national economy. Take cryptocurrencies. These new ways of paying for goods have already shaken things up across the world. Mobile money like the M-Pesa is used by over half the population in Kenya, and we should welcome cryptocurrencies in a way that doesn't constrain the potential of this technology. Secondly, we should revisit the way our economy is regulated to break down monopolies and cozy practices. In South Korea, streamlined utility regulation allows much more competition between different utilities, meaning very good infrastructure and very high internet speeds. The last time the UK's utility regulation had a serious shake-up was the 1990s, and that was before the emergence of the internet. Thirdly, we should liberate high-growth free enterprise areas, removing the regulations that get in the way of prosperity. Docklands was once the left-behind part of London, but Canary Wharf now rivals the city. And it's because of the freedoms we gave to the Docklands Development Corporation. The dream of Canary Wharf, Surrey Quays and London City Airport became a reality. These were all delivered by a Conservative government. And we should scale that model up across the country, from our delivery of a new generation of garden towns to new manufacturing zones. Lastly, we should use free enterprise rather than tax and regulation to solve our big public challenges. In health, disruptive new entrepreneurs are revolutionising hospital treatment. Everyday goods like smartwatches have the potential to transform public health. And with real-time peer-to-peer information like TripAdvisor, surely we can remove some of our bureaucracy. We should also open up our environmental markets to exciting enterprises to deal with problems like plastics and dirty water that Michael Gove has highlighted. In conclusion, great economies are not driven forward by planning and control. They are driven forward by the freedom to be disagreeable. We've got an entire generation in this country that has grown up feeling the excitement and possibilities of Britain's open, enterprising economy. And they want to hear from politicians who want to open up opportunities, not close them down. Let's capture the hearts of this freedom-loving generation by showing it's the free part of free enterprise that we value most highly. After all, it's their talent, their ideas, and their disagreement that will drive forward our country.
Liz, thank you very much indeed. You've set us up very, very neatly to have a panel discussion about this. And that was plainly a very bullish and confident speech about what markets can do and what free enterprise can do to generally liberate opportunity for people. Dean rather cruelly alluded to the fact that many years ago I spent a number of years as an advisor in Whitehall at the Treasury. And of course at that time, a large chunk of the UK economy was taken out of the market. It was controlled, its prices were essentially set by administrative fiat, and that was the nationalised sector. And some 10% of UK GDP was controlled through the state. It accounted for about 15 to 20% of investment and employment at different times. Anyone who's alert this morning will know that's a very poor rate of return on for the resources that were deployed. And there were many challenges that the consumer and the taxpayer found wanting, because the body that owned the company, the body that had to regulate the company, and the body that had to pay for the company was one and the same. So often the consumer and the taxpayer found the system wanting. If you were concerned about environmental regulation, so particularly in relation to water regulation, one of the reasons why water bills have been so very high over the last 30 years was in the previous years there was insufficient attention to the quality of rivers, beaches and sewage. And the reason for that was that the regulator was the government, and the government was also the paymaster, and was conflicted. I saw this in what to do about BT. BT had already been privatised by the time I got there, but the government owned a lot of shares in BT. So did you take further measures to bring in competition that devalued your current stake, or did the people involved in asset sales say, no, don't do that, we've got a 30% slug of BT still to sell, and I don't want you to improve competition and reduce the Treasury take on that. And the difficulty with nationalisation is you have big, complex utilities and monopolies where very awkward decisions have got to be made, and encompasses in a wrapper called nationalisation is an evasion of the transparency and the kind of choices you've got to make. Now, I don't think one can beat about the bush in the UK at the moment that there are a group of politicians and commentators who are not just saying there are certain aspects of a market economy that's not quite working perfectly and need to be improved, that has a serious, well-honed and careful agenda of the sort that Adrian's explored in much of his writing. You've got a group that say the whole system is failing and the whole system has potentially got to be replaced, and they quite expressly draw on a Marxian socialistic tradition, which they're very open about. Now, in the last 100 years, we've actually seen several remarkable experiments in non-market production. The Soviet Union in 1917, which we talk about the innovation that capitalism can generate, the diffusion of technology. By 1990, the USSR couldn't even produce a pair of shoes and an overcoat reliably, let alone a phone, a dishwasher, or any of the considerable durables that most people might be interested in considering. In contrast, you find in advanced economies like the US and Western Europe, the prices of those things falling very sharply. A friend of mine checked the numbers for me yesterday. I think a complex phone now could cost you about 300 quid. 30 years ago, it was more like 3,000 quid. A dishwasher, when I was a little boy, dishwashers were remarkable instruments. They were available in the most plutocratic households. By the 1990s, about 20% of households had them. Now, I think about 45% of households have them. So innovation, technical progress actually reduces costs. But innovation and technology alone doesn't reduce costs and make things available to households across the piece. The Soviet Union had one of the largest scientific establishments in the world. So did India. India copied the Soviet Union with its 5-year plans and its license Raj, and it failed to deliver the goods to its consumer households. It was a very disappointing performer from the 50s through to the 1990s, when they began to embark on a program of what have been really very successful reforms. But for me, the absolute acid test of do you want to go down the goodbye Lenin nostalgia route is to examine Germany. 20 years after the changes in Germany in 1990, the American Economic Review had a whole suite of papers it produced. But the most arresting one was one looking at the German economy in 1937. And those parts that became East Germany were somewhat more economically advanced, higher levels of income and earnings than the western part, largely because there's more manufacturing in the east. Fast forward 30 to 40 years, East German output and productivity and incomes were running at about 1/3 of West Germany. And in fact, I think you've got good grounds for anyone who's familiar with net material product, the numeraire that was used in the socialist economies, to doubt that even. So there's no doubt that on the big picture of what delivers the goods for ordinary people wanting a job, wanting an income, and wanting stuff to go and buy is a market economy. We've also got to recognise, however, that not everything in a market economy goes right. This is why we have elaborate public intervention, and why there's a very complex argument about how big the public sector should be. And the Chief Secretary of the Treasury, quite rightly, in the role she plays at the Treasury, in her speech has alluded to the fact there's a very real danger that the public sector can crowd out the private sector. And I think that the government, over the last 7 years, is actually just beginning to get that balance more appropriately struck than it was before. My own judgment is that probably that balance is something closer to 35% general government expenditure versus national income than the sort of 39% where we are at the moment, and we're drifting in that direction, and that is very good news indeed. There are problems, particularly in relation to corporate governance and the stuff that I know that Adrian's very interested in. And I'd put it like this. Since the Italian Renaissance, when apologies to people who speak Italian, Fibonacci did his numbers that transformed the calculus for things like interest, and double entry bookkeeping was perfected, we know that the thing that has driven effective mercantile capitalism is good accounting. And over the last 20 years, every time something's gone wrong, at the heart has been the failure of accounting procedures, whether it's Lehman Brothers, whether it's Enron, and of course at the moment, both in the US and in the UK, there are stewards' inquiries taking place in the way some big corporations have been handled. And I think one of the questions we've got to ask, when you have joint stock regimes where the accountants and the actuaries have got to actually be the guardians of the investors, what is going on and how can we improve that? And I just end by saying, this isn't theoretical. This is yesterday's FT. This is active funds. If you have an actively funded pension fund where you pay large bills to pension fund managers to actively try and outperform the market, you will do better. But 75% of that outperformance gets taken by the fund managers. Something plainly is at odds. Now, it's not the whole system that's got to be replaced, but it's actually looking in an intelligent way of how you can actually make those difficult things to do with accounting practices, the sorts of things that people were trying to achieve through MiFID II, how you can make those things better. And that's a very, very tall order. And I know that neatly takes us on to Adrian, who's thought a lot about those things.
Well, Liz talked about the importance of the freedom to be disagreeable. And I'd like to be a little bit disagreeable this morning, because I'm very worried about this debate, particularly worried about what Liz was saying, that we're beginning to be trapped in a sort of mode of self-congratulation, and that's not a very sensible approach to the world when we're confronted with the gigantic threat of a Corbyn government. I think that we're essentially at the end of an era in politics. When I first got interested in politics in the late 1970s, we were seeing the end of Butskillism, essentially. The whole thing was quite visibly collapsing. And I worry that we're now seeing the end of neoliberalism. The whole thing is visibly collapsing around us. And we could go off, as a result of the end of neoliberalism, in a very, very dangerous direction. We've seen Thatcherism essentially worked extremely well for a certain period of time, and there was a great deal of low-hanging fruit, which was gathered from privatization, from selling off council houses, and there was a great deal of low-hanging intellectual fruit as well from the iteration of the word freedom. And now we face a very different set of circumstances, a set of circumstances in which we don't have that low-hanging fruit, in which we have very low levels of productivity growth, and which the intellectual gains from reiterating the word freedom are diminishing, because we live in a world of massive concentration of platform capitalism, and a world in which people don't see the biggest threat to their lives as a lack of freedom for people to make money, but as a lack of themselves to get any opportunities. And what we have seen also undercutting that is the advent of what I would call crony capitalism under the Tory government and under the Labour government. Essentially what you have is an extraordinary growth in CEO salaries unconnected with productivity. J.K. Galbraith said that a CEO salary was essentially a warm and much appreciated gift given by the CEO to himself. That's what we have in this country, except it's not quite yourself, it's one CEO to another CEO. They're all sitting on each other's boards. We also have, and I think it's extraordinary in this country, not just CEOs, but the chief financial officers. If you look at the salaries of CFOs, they've grown faster than the salaries of CEOs. If you look at Carillion, the CFO of Carillion was paid almost as much as the CEO for, I would have thought, well, I won't go into that. So I think that we need to have a different set of agendas, which doesn't just consist of celebrating freedom, doesn't just consist of celebrating capitalism, but begins to tackle some of the weaknesses of those things. I think we need to tackle, obviously, cronyism and self-dealing, looking perhaps to strengthen the role of owners. That's the obvious free market solution. I think Nick Bowles has been talking a bit about cutting corporate tax rates, but making reception of the cuts of those corporate tax rates conditional on ratios of pay. And I also think that changing the composition of boards, I think that the boards are one of the great scandals of capitalism, actually. They exercise an enormous amount of power. They tend to be just a bunch of time servers, CEOs or retired CEOs scratching each other's backs. We need to look very carefully at the composition of boards. But I think we need to go a bit deeper than this, unless we want to get Corbyn. We need to look at the market in corporate control. This country has an incredibly liberal market in corporate control, the most liberal market in corporate control of the world. And the combination of a very liberal market in corporate control and a very liberal market in capital means you quite often get corporate takeovers which do not benefit the companies. One of the arguments for a liberal market is it doesn't matter where ultimate corporate control, doesn't matter where headquarters lie, as long as the company is still operating, headquarters can be in Chicago and the rest. Well, if you look at the experience of Cadbury, that was not a very happy experience. And if you look at the academic literature, there is an overwhelming relationship between where the headquarters is and where the investment in really high value added stuff. So I think we need to rethink our market in corporate control. We need to rethink, we're very fundamentalist about listing in this company. If you want to list, essentially you have to, if you're a family company who wants to list your company, you essentially have to give up control. We don't have A, B, and C class shares. It's impossible to maintain voting right control on a company whilst listing on our stock markets. That's very different from the US stock market. About 30% of US companies have controlling shareholders who have A-class shares. And in doing that, we're not only making it harder for family companies to grow, because family companies have to make an absolute distinction between growth or between getting equity or losing control in the way that they don't have to abroad. We're also making it much more difficult for startups, tech startups to grow. Almost all tech startups want to keep control. The founders want to keep control. They do that in the United States. Facebook and the rest of them have this dual listing system. They can't do that here, or they can do it with great difficulty here. So that listing needs to be rethought. And finally, I thought I might annoy Matt there in particular. I think we might even have to look at the workings of our property market in this country. We have a system here where particularly in London, where we have huge numbers of properties sitting empty. We have a market in properties that we have foreign owners of properties buying, selling those properties even before anybody lives in them. And I think that may well be unsustainable in terms of public legitimacy in the longer term. In New Zealand, which was one of the great pioneers of neoliberalism, and that now actually has a system whereby you cannot, as a foreigner, buy an existing property in that country. You can build a new property, you can create new property, but you can't buy and trade in property in a country that you don't live in. So I think if we're going to avert Corbynism, I think the likelihood of averting Corbynism is very small and falling by the day, given the conduct of this government at the moment. If we're going to do that, we have to do a lot of very radical things.
Thank you very much indeed. Now, obviously, part of the story of capitalism and markets is that process of creative destruction. We're very lucky to have Danny Lopez here, the Chief Operator of Blipper, because he's involved actually both in the creativity and, I dare say, if it all works, some of the destruction as well. So, Danny.
Sure. Thank you very much. So the first question I wanted to ask you is how many people here either own or have traded cryptocurrency? Okay. And for those of you who haven't, how many of you know somebody who has? Okay, so it's split. And I find this very interesting because there's a very big generational gap here when it comes to, not here by the way, just when it comes to understanding so much of what's coming our way. And I work for a company that's only 6 years old, where the average age is 28, and around 80% of people in the company dabble in cryptocurrency. And they do so because they don't necessarily trust the financial system that they've grown up in as one that can kind of reward them in later years, which I think is fascinating, and maybe it's a discussion for another day. But what I wanted to touch upon is what drives innovation. So I work in a company that has two founders who were 24 and 31 when they started this company, Flipper. Their dream is one where the camera lens on your phone or any device is a gateway to the physical world, recognizes anything in front of you, like Google does when you ask it a question, and then overlays digital content to be able to give you valuable information back. So they were this young when they started this dream. And what really drives them is their passion and their belief that they're onto something that nobody else has ever thought of, and that they can take this the whole way and create something that is, yes, disrupting, game-changing, and will add value to the whole world. For me, the fundamental reason why this is allowed to happen is because they're taking a huge risk, and if they do well, they will be rewarded accordingly. And I think that's very important because this sort of relationship between risk and reward is what so much of the innovation space is based on. They research trends, they research demands, and they come up with things that people need or might not even realize they need. I mean, if you think about Steve Jobs, they came up with the iPhone. Nobody thought that they needed a device like the iPhone. And if you have an environment where you are able to reward innovation and reward risk takers, then you come up with things that you never expected, like Velcro and Post-it notes, for example. I also think it's very important to place a lot of trust in consumers as a way to be able to determine which companies make it and which ones don't. So consumers vote with their money, and by voting with their money means that good ideas will prosper and flourish, and ideas that aren't so good will eventually die. And companies that have those ideas will be will terminate, that resource will be redeployed, etc. And there's a lot to be said for allowing consumers to be able to make calls on the success of companies and their future. We talk a lot about innovators being rewarded because they take risks, but of course consumers benefit enormously too. So low prices, variety, constant competition will lead to far more products, and people will benefit from that. And I think that when it comes to a company like ours, we're a startup, we're on the verge of becoming scale up. What do we need? We need a government that provides the right environment for us to be able to grow. We need a policy framework that encourages what we do, that champions what we do, that embraces technology, not just by helping and championing, but actually utilizing a lot of that technology within the public sector too. I think it's very, very important that the government are able to embrace new ideas, embrace new technology as fast as the private sector is doing. It's a way of being able to win globally. I, by the way, have done very different things. I was in banking for many years. I was in public service for a number of years. I now decided that I wanted to refresh my private sector credentials and do so in environments like technology, because so much of this technology is changing the way we live and the way we engage. But it's absolutely crucial that if you think about government trying to promote startups around the world, of course that's important, but you start by actually utilizing that technology at home, and that is actually something that is happening right now, which is hugely, hugely important. And that way there's more R&D, there's more innovation, and you have entrepreneurs who get excited about leaving school and doing something completely different. I come from a generation that you kind of left university and the default was to join a big company because that's sort of what your parents encourage you to do, and you saw that as a path to success. We now all know very well that so many people are leaving school and they're deciding to just do something on their own. Entrepreneurs with zero experience, with huge ideas that are disrupting, that are game-changing, and they need an environment that backs them. So for me, as I said, just to wrap up, innovation relies very heavily on free markets. Entrepreneurs rely on free markets. They're rewarded in the right way if they succeed and they have a good idea. If they fail, they will most likely go on and do something else, and they might try 20 times, but it's that environment that allows them to be able to prosper.
Lovely. Thank you very much indeed.